Alrighty then, ladies and gentlemen, pretty crazy day in the market, dropping another couple hundred points. For those of you that tune in with us each morning, you probably had sort of an idea as far as what we were looking at in the market today. We did expect we could see another bearish day. We took a couple trades on the S&P 500, took a trade on Apple. We're going to cover those here today. It's nothing too crazy, but definitely some good learning educational content coming in this video. So I gotta say, market threw me for a little bit of a curveball, and I'm gonna show you exactly why here in just a second. So let's get into sharing the screen. Here is the S&P 500 today. This is a daily chart. As you can see, the past 2 days have been pretty bloody. We've been getting smoked. A lot of this is due to the technology stocks selling off. Apple, Tesla, Advanced Micro Devices, Nvidia, pretty much a lot of your big tech name stocks that have been running and carrying this market full steam ahead have just now recently started to correct off of a lot of this hype we've been seeing. And in doing so, it's really dragging down some of the major indexes here. So with no further ado, let's sort of jump into the 1 minute chart. That way I can show you some of the trades we made, and then we're gonna jump back and take a look at some of the larger time frames to show you why we were doing what we were doing, when we were doing it, for the good and the bad. All right. So here we're going to take a look at a 1 minute chart. For those of you that tune in the channel and trade with me on a daily basis, you pretty much know that I do most of my work off of 1 minute charts. Okay. So what I want to do is just zoom in on this day, and we're just going to go ahead and apply the trade. So hopefully this pops up right away. Sometimes it gets weird. Okay. So cool. They're there. All right, so let's run through this. First trade on the day you will see was just a small trade. It was 50 shares here. To put it simply, I thought we might actually roll down really quickly in the morning into a short. So you can see the market opens, and on the second candle of the day, I'm taking a trade of 50 shares short on the S&P 500. Now, there's a couple reasons I did this, the reason I made such a small size trade there. So the reason I went in 50 shares was so I didn't take a huge position just to start the day on only the second candle. And the reason I wanted to take a trade really quickly was, I thought it might go down. What this allowed me to do is take a trade right in the morning, pretty much as soon as the market opened, and sort of get a grasp and a feel for how the market was moving right when we opened with those 50 shares. So I was able to get active in the market with 50 shares without taking a whole lot of risk, and then just kind of see how the market was feeling at that moment in time. So very easy, I was able to determine that the market was going to push higher to open the day or start the day. So I closed out those 50 shares and I let it work. Once we get our first rejection on the day, we see a little bit of trading. You can see I instantly up my size to 300 shares short on the SPY. It drops a little bit. I pretty much get an instant win of like $100. I take off 200 shares. And then from that point forward, I just held 100 shares short on the SPDR ETF. And as we kind of drop down and get our first sort of bounce on the day, I take off most of my shares. And then I'm just holding a little bit, only like 20 shares. So as a whole, I shorted the entire market down this morning, didn't hold full size while doing it, took some off along the way down, was able to net about a $400 trade, a little bit more than $400 green on the day. And then you will see as we get down here, I start taking longs. I take 40 shares, I take 100 shares, I take 20 shares, 20 shares, 20 shares. So you can see I'm starting to long into the bottom of this move. Now, there's really nothing about this move that looked extremely bullish, hindsight 2020. But as we take a step back and we look at this chart more, you're going to see exactly why I was entering there. But it didn't work today. A lot of times it would, but today just wasn't the day. So as a whole, I ended up walking away only making $134 all said and done on the S&P 500 a day, okay? While other people, I'm sure, killed it. All right. Now what I want to do is we're going to take these trades off, and then we're just going to go look at the daily chart, and I'm going to show you guys a couple things. So first, we'll do the 4-hour chart. This is a 180-day, 4-hour time frame. For those of you that tuned into the morning live stream, you guys will know that we were recommending watching for a break below the price level right here, right where that orange line is on the chart. That's where we're saying recommending watching short as the market can break down there. So you'll see that dotted line kind of comes in right there, and that pretty much matched up with the low of day from the start, and then that's where we cracked, and then we kind of just fell through at that point. All right. The reason I started to get long where I was getting long is because if we go back and then we flip it to a 1-year day chart, you will see that we have this orange line coming into play right about here. Now, a lot of times the market would drop down to the next biggest trending support level and then bounce. So you can see that I started to get long just before and into that level that I determined could be a bounce spot on the day. Once we had gotten down there, we sized in the position and we could just feel that the market was still going to fall through. We ended up taking it off and just cutting the loss and letting the markets fall rather than fight it, hope, wish, and pray. Now, as you can see, as we kind of zoom back out, the markets ended up recovering pretty much to that price level and up and over a little bit, but sure enough, it took quite a bit of time. So a couple things here to take away. Markets were bearish today. We went short as the markets broke down one of their major trend spots. And then as it fell to another major trend support, we went long, but of course it wasn't strong enough, fell through, and we took a small loss there on that stock. Now, if we go over to Apple, we did take a trade here on Apple. Now, hindsight 2020, it could have been a way more significant trade. I could have made way more money if I would have just stayed shorting Apple rather than shorting the whole S&P 500 ETF. But again, to look back and say, oh, I should have done this and I should have done that, I mean, it's just going to drive you crazy. So take what you know and run with it and make money the way that you know how to make money. And I think once you accept that, trading does become a little bit easier. There will be moments where I try to do something in a trade, or I try to hold something a certain way, and then it just doesn't work, and it's all really in the effort to, either make more money or make a bigger trade that I know is possible, and that can lead you into some dangerous outcomes. So a lot of times, just stick to your own plan, trade the way you would typically trade, or trade the way that you know is going to result in you making money. You don't have to make the most money in the world. You don't have to be trading the same things as other traders. You don't have to be taking as much risk as other traders. You don't have to be trading options on the S&P 500 just because someone's trading options on the S&P 500 and it makes more money. Connor shorted the S&P 500 with shares. If I would have went short options, I would have made probably quadruple the amount of money I made today. Okay. But at the end of the day, the trading process is still the same. What's profitable is what's profitable. What's directional is directional, okay? So you will see here on Apple today, I think I make like $100 or something. Oh, 176, excuse me. So 176 bucks. Long story short, there was a couple little things we did here. Let me put the trades on. Okay, so let's zoom in. So first trade was a short on the day. I go short 300 shares up here. As soon as we get a drop and as soon as we get into a profitable trade, I lock in money and then I just leave, looks like 50 shares hanging on. And then as we drop out a little bit more, I cover. Okay, so you can see I pretty much just cover most of my shares into that early morning drop. And there's reasons why I was doing that. If we were to go look at the S&P 500 at the same time that I was shorting Apple, you'd actually notice that the S&P 500 was bouncing upwards on a couple candles. So I had built this notion that the amount of money that I made when that time frame or that window on Apple was good enough for me because I noticed the market was starting to bounce. So, there's lots of situations where I had seen that before throughout my years of trading, and next thing you know, you kind of reverse the win you had because the market bounces and the Apple bounces. So I kind of built up that idea that it would happen. So you will see that I end up shorting the SPY. The SPY is what I ended up holding short on because once I had noticed the market was going to get weak, I pretty much just said, all right, let's just go short the market and then watch how that falls from there on out. So we ended up going short here on Apple to start the day, and then as the market started to bounce a little bit later, you'll see I took 1,000 share scalp in there. Pretty much just scalped 1,000 shares really quick, made a little bit of money, and essentially was happy with that day. All right, I know some of you guys are looking at this going, oh my God, you bought 1,000 shares. If you would have just held it, you would have made so much money. That is actually factual. That is true. But I will be making a video later today discussing Apple and Tesla and what I have done just today. All right, guys. So those are the couple trades that we made there with the S&P 500 and Apple. And really the main takeaway from today's video here is simply that we were watching the S&P 500 for a break below that 4-hour trending support. Again, if I could go back and just show it to you one more time, if you look at that diagonal line coming in, all we did was really map off a red dotted line for a visual perspective over that line so that when we zoom in on the 1-minute chart here, or whether it was a 5-minute chart, doesn't really matter, we just know exactly where that 4-hour trend exists and go, if we break that in the day, we might sink. And so today the plan worked very well. Our bounce trade did not work so well, unfortunately. And really that is okay. So with no further ado, I appreciate you guys tuning in. I hope you guys like a little bit of these recaps. I hope you guys learned something new. As always, hit the thumbs up button, subscribe to the channel, hit the notification bell, all the good YouTube stuff. That way you don't miss out when we upload a new video. Everybody take care, have a great day, and I'll see you guys on the next one.